A Texas homeowner just lost $13,600 on a roof replacement claim because their first insurance check was only $14,500 instead of the full $28,100 they're owed. That gap comes straight out of your pocket. Most homeowners never see it coming because of the hidden claim processing fee line in your policy that's actually part of recoverable depreciation. By the end, you'll know exactly how to claim back thousands, starting with the hidden first. Check. Your insurance policy has a hidden clause costing you thousands. This is standard industry practice. The gap can come from depreciation, your deductible, or an actual cash value payout. That is why the policy exclusion matters. The claim may respond, but the first check may not finish the repair. If you miss the ACV versus replacement cost line, the repair invoice can be bigger than the payout. Start with the line most homeowners skip: actual cash value versus replacement cost. Homeowners often receive a $14,500 check after a roof claim, thinking it's the full payout. For example, if your roof was replaced for a significant amount but the insurer only paid the allowed upfront amount, that gap is yours to claim after repairs. Many miss this because they assume the first check covers everything. With an RCV policy, insurers typically pay ACV initially and withhold recoverable depreciation until repairs are documented. Insurers like State Farm and Allstate follow this practice per industry standards. Homeowners must submit receipts, invoices, and photos within 180 days to avoid forfeiting the funds. Without proof of completed work, the second payment never arrives. Insurance companies withhold recoverable depreciation until repairs are complete. This isn't a scam, it's standard policy language. Your contract likely says initial payment based on ACV with recovery upon proof of repair. But most homeowners don't notice this clause because it's buried in the fine print. The $28,100 total payout figure is hidden until you check your policy's coverage section, not the claim summary. For example, a homeowner with a roof replacement, RCV, might receive an initial ACV payment, leaving a significant amount in recoverable depreciation. This gap appears because policies like those from State Farm and Allstate typically require homeowners to submit receipts and photos after repairs are done. Without this proof, insurers keep the difference, sometimes for months or even years. Many homeowners miss this detail, which can result in significant unclaimed funds. To avoid this, always review your policy's recovery process section and save all repair invoices before starting work. Missing recoverable depreciation means paying out of pocket for repairs. In this case, the $13,600 gap equals $5,900 in contractor fees, plus $4,200 for materials markup and $3,500 labor adjustments. Homeowners who never submit proof forfeit these funds, effectively losing money they already paid for coverage. One Texas homeowner waited 18 months to claim the second check, missing a 6-month deadline and losing $28,100 total. You don't need fancy receipts, just standard repair documents. The insurer requires invoices, photos of completed work, and a signed contractor statement. For example, the $5,900 processing fee should appear on your roofer's invoice with a line item like claim processing fee. Many homeowners discard these documents thinking they're irrelevant, but this is the proof that unlocks the second check. According to propertyinsurancecoveragelaw.com, recoverable depreciation is the difference between an item's replacement cost value, RCV, and its actual cash value, ACV, after accounting for wear and tear. Homeowners with RCV policies typically receive an initial ACV payment, withholding a significant difference for a roof that costs a higher amount new but has a lower ACV due to age. After repairs are completed, insurers like those referenced by Insurify.com require proof, including receipts showing line items such as recoverable depreciation claim and photos of the finished project. Without this documentation, homeowners forfeit thousands, like a significant processing fee or the full depreciation amount, as noted in guidance on common claim errors. Most policies have a 365-day deadline from the date of loss to submit proof. Texas homeowners often miss this because insurers don't send reminders. Only the policy document states it. One case involved a homeowner who waited until day 370 to submit. losing $28,100 permanently. The key is checking your policy's claim timeline section, not relying on the insurer's verbal confirmation. Property insurance coverage laws state that most policies require repair documentation within 1 year of filing a claim. Insurify reports that homeowners with replacement cost value (RCV) policies often receive an initial ACV payment but must complete repairs within this time frame to claim the remaining depreciation. In a documented case from Texas, a homeowner delayed submitting their invoice until 370 days post-loss, resulting in a $28,100 permanent loss of recoverable depreciation. The proof required, receipts, invoices, and photos of completed work, is detailed in staterestoration.us's standard practice for insurers to verify repairs before releasing the second payment. Contractors sometimes inflate the claim processing fee to $5,900, which is actually part of your recoverable depreciation. This isn't a scam, it's how contractors structure bills for insurance claims, but if you don't verify this line item, you'll pay extra. The $4,200 materials markup and $3,500 labor adjustment are standard in roof replacements but often overlooked as separate costs. Recoverable depreciation represents the gap between what a damaged item would cost to replace today and its current depreciated value. With replacement cost value coverage, policyholders usually get an upfront payment based on current market value before receiving additional funds post-repair. For example, if your roof replacement costs a higher amount, RCV, but the ACV is lower due to age, you're owed a significant amount in recoverable depreciation. Insurify.com confirms that insurers withhold this amount until you submit receipts and photos showing completed work. Many contractors include the recoverable depreciation as a separate line item like claim processing fee, but it's not an extra cost. It's money you've already earned from your insurance policy. Start by reviewing your policy's recoverable depreciation section. Then collect all repair documents, especially the invoice line item for claim processing fees. Submit these within 180 days, not 365, to avoid delays. For example, if you paid a significant amount for a roof replacement, your insurer should release the full allowed amount after proof. Don't wait until the deadline approaches. Start now. The amount of recoverable depreciation equals the gap between full replacement costs and the adjusted value considering normal aging. Policyholders under replacement cost coverage often receive partial payment, initially followed by final settlement after repair verification. The key documents include receipts showing materials and labor costs, like those from Keaton Construction and Roofing.com's examples, and photos of completed work. What matters is that missing the 180-day window means losing thousands, as seen in a case where a homeowner forfeited a significant amount by waiting too long.